Hello everyone. Welcome to this channel. Today we will talk about life insurance in Canada. Most Canadians think life insurance is something you deal with later. Later when you're older, later when you're richer, later when life is more settled. But here's the truth. Life insurance is not really about death. It's about what happens to the people you love if something happens to you too soon. In the next few minutes, I'm going to break down what life insurance in Canada is all about. So you can decide if it's something you need and what kind actually makes sense for you. Because let's be real, it's a case by case thing. So, what exactly is life insurance? It's actually pretty simple. You pay a small amount of money, which is called a premium, on a regular basis. If you pass away while the policy is active, a tax free lump sum of money gets paid out to the people you've chosen. That money can be used for a lot of things. It can replace the income you're no longer bringing in, pay off a mortgage or other debts, cover funeral costs, or support your children and dependents. Essentially, it gives your family time to grieve without having to panic about money. Think of it as income protection for the people who rely on you. Sounds pretty great, right? Now, who really needs life insurance in Canada? You probably need it if someone depends on your income, if you have children or plan to have them. If you have a mortgage or joint debt with someone else, or if you own a business, it's also for you if you simply do want your family to struggle financially if you're really suddenly gone. On the other hand, you might not need it if absolutely no one depends on you financially, or if you already have enough savings tucked away to cover all your final expenses and debts. See, life insurance isn't about fear. It's about responsibility and planning for the future. All right, guess what? In Canada, there are mainly two types of life insurance. So let's talk about them. First up, we have term life insurance. This is the most common and affordable option out there. It covers you for a set period of time or a term like 10, 20, or even 30 years. If you pass away during that term, your beneficiary gets paid the full amount. If the term ends and you're still alive and well, the coverage simply ends. This type of insurance is perfect for young families, for protecting a mortgage or for general income replacement during your key earning years. The big takeaway for term insurance is high coverage for a low cost. The second type is permanent life insurance. As the name suggests, this one lasts for your entire life. The coverage never expires as long as you keep paying the premiums. Because of that, it does cost more than term insurance. One interesting feature is that it can build up a cash value over time, which you can sometimes borrow against. Permanent insurance is usually best for things like estate planning, covering final expenses no matter when they happen, or leaving a long-term legacy for your loved ones. The main idea here is lifelong protection. Most Canadians actually start with term insurance and then adjust their plan as their life changes. So, how much life insurance do you actually need? Here's a simple rule of thumb to get you started. Take your annual income and multiply it by 10 to 15 years. Then add your mortgage balance, any other debts you have, and future expenses you're planning for, like your kids' education. But remember, there's no one-size-fits-all number. The right amount really requires a tailored approach that fits your specific situation. And here's something that might surprise you. Life insurance is usually much cheaper than people expect. A lot of people don't find this out until it's too late. Your actual cost will depend on a few key factors: your age, your current health, your lifestyle, like whether you smoke or not, the amount of coverage you want, and the type of policy you choose. The key is the earlier you apply, the lower your cost will be. And once your rate is locked in for a term policy, it won't increase for the entire term. Waiting to get covered often ends up costing you more than just starting now. Okay, let me walk you through the simple steps to secure life insurance in Canada. It's not as complicated as it sounds. Step 1. Decide asterisk why asterisk you need coverage. Is it for income replacement, debt protection, or just general family security? Knowing your why is the most important part. Step 2. Choose the type of insurance. Based on your goals, will you go for term or permanent? Step 3. Apply. This usually involves answering some health and lifestyle questions. Be honest here. Step 4. A medical review, if it's required. Sometimes this is just a questionnaire, and other times it might involve some basic tests. Step 5, approval and policy issue. Once you're approved, your coverage officially begins as soon as you make your first payment. That's it, no stress. And I'm here to guide you through it. Look, life insurance isn't about expecting the worst. It's about protecting the people you love from financial stress when life throws a curveball. It's about being prepared. Please remember this video is for educational purposes only. Everyone's situation is unique. If you want some help reviewing your options or creating a plan that truly fits your life here in Canada, feel free to reach out to me using the email you'll find in the channel details. Protecting your future starts with understanding it. Thanks for watching, and be sure to follow for more insights and tips.